Welcome back to SundayPips. Today's question is how to determine whether your setup has a low chance of working out or has a high chance of working out. That's very easy to answer since the set and forget strategy has a whole grading system. This is the stuff I'm going to be looking for on the weekly time frame. This is the stuff I'm going to be looking for on the daily time frame, and then the 4-hour, and then the lower time frame. First, we start with identifying the trend. We all know this. We start on the weekly time frame and then we go down to the 4-hour. So weekly time frame, are we bullish or bearish? Weekly time frame is bearish. This the lower high, and this down here is the lower low. But for the sake of this lesson, let's just say weekly time frame is bullish. But even if it wasn't for this lesson, I'll personally still count weekly time frame as bullish, because whenever I identify areas of interest, for example like this, I expect for price to pull back to my zone and then go create the new lower low. But if price stays around my area of interest like this, I then focus on current price action. And if we look at current price action right now, technically we are bullish. So weekly time frame, this is going to be the higher high, and this down here is going to be the higher low. And then we go down to the daily time frame. Daily time frame, are we bullish or bearish? Daily time frame, we are bullish. This up here is the higher high, and this down here is the higher low. Then we go to the 4-hour, the final time frame. 4-hour, are we bullish or bearish? 4-hour is also bullish. We close above the previous structure point, shifting bullish. Now that we have identified the trend, we go back to the weekly time frame and then type up what we saw. I was supposed to do this as I was going from time frame to time frame, but I forgot since I no longer type up my confluences. But for the sake of this lesson, let's just type it up. Weekly time frame was bullish, other time frames were going up. Weekly bullish, daily bullish, and then 4-hour also bullish. And since most of the time frames are going up, bullish means up and bearish means down. Most of the time frames are going up, so we're going to be looking for buys. And then I'm going to type that up too. I'm going to put it above this. Reasons to go long. And for those of you who don't know, long means buys. And let me just make this a little bigger. I know some of you need this. Let's go with 28. Is that too big? Okay, 28. Cool. Okay, now that we have done this, we now identify our areas of interest for price to pull back into, for us to then catch our potential buys. I already identified the areas of interest. We start on the weekly time frame. On the weekly time frame, didn't find any valid areas of interest. If you don't know how to identify areas of interest, I made a whole video on this. I suggest you go check it out. And then I found this beautiful area of interest on the daily time frame. This D right here, you see on my zone means I identified this box, this area of interest on the daily time frame. Sometimes you'll see a W right here. That means I identified that area of interest on the weekly time frame. On the daily, this zone very well respected. Whenever price is under, we go down, and whenever price is above, we go up, we go up, we go up. Now that we have identified our areas of interest too, we wait for price to get to the zone, meaning I now unpause this thing. By the way, we don't start looking at this until price first makes it to the area of interest. And I forgot to tell you this, each time frame is worth 10%. If a time frame aligns with the direction we're planning to go, in this case buys, we add 10% towards the grade. So let me type that up and then I'm gonna explain it a little more. So we put 30%. Where did this 30% come from? Like I told you, each time frame is worth 10%. If it aligns with the direction, we add 10% towards the grade. So all I did was just add up all the percentages, and since all the time frames align with the direction, it adds up to 30%. For example, if 4 hour was bearish, this grade will no longer be 30%. It will drop down to 20%. And if daily time frame was also bearish, this grade would then drop to 10%. You see how that works? If a time frame does not align with the direction, we subtract 10%. If it aligns, we add 10%. So this is 30% since all the time frames align with the direction. Bullish. What? Okay, let's unpause the thing. And why am I on the daily time frame? Because I love seeing it play out from here. And let me put this on 1x. Now unpause. Boom, blue candle on the daily time frame. We go back to the weekly time frame. We're gonna have to keep going from the weekly to the daily and then the 4 hour just to see what changed. So on the weekly time frame, still the same, still bullish. Daily time frame still the same. All we did was just create this blue candle. We're still bullish on the daily time frame too. 4 hour, same thing, still the same. All we did was just create a new higher high. We go back to the daily time frame and then unpause it from here. Boom, red candle on the daily time frame. We go up to the weekly time frame, still bullish, nothing changed. Daily time frame still the same. All we did was just create this red candle. And then on the 4 hour, we are now bearish. This was the higher high on the 4 hour, and this down here was the this was the higher low on the 4 hour. If I drag this line to the left, you can see the price close under the higher low on the 4 hour, meaning we are now bearish. So I bring out my thing and then tap it up. Where's the thing? Okay, 4 hour is no longer bullish, it's now bearish. I tap that up and this grade drops to 20%. We should know why now. So we go back to the daily time frame and then unpause it. Oh, we are on the daily. So unpause. Boom, red candle on the daily time frame. We go back to the weekly time frame. Weekly time frame has now made it to the area of interest. Now we start looking at this. The first thing on our list is structure point, meaning previous structure point. What is the previous structure point? Previous structure point, previous structure point, previous structure point. And when we are in a uptrend, previous structure point, previous structure point, previous structure point, previous structure point. Now the question is the weekly time frame retesting the previous structure point? The answer is yes, because weekly time frame created a wick, and if we look to the left, it's right around where the previous structure point is. If the wick closed any lower like this, we will not be retesting the previous structure point because it will be under the previous structure point. And if this wick closed up here like this, we will not be retesting the previous structure point because we will be above the previous structure point. Pretty easy, pretty obvious. So I tap that up. Yes, weekly time frame is retesting the previous structure point. First I put 10% and then structure point. And let me just put a W right here to remind us that it happened on the weekly time frame. Next thing is EMA. Is the weekly retesting the EMA or rejecting off of the EMA? The answer is no, since the EMA is up here and not down here. If this EMA was right here like this and this candle wicked into it before taking off, then we will be rejecting off of the EMA. We're not doing that. It's above price, so no. Let's cross that out. Next thing is weekly time frame rejecting off of an area of interest? And the answer is yes. Weekly time frame is rejecting off of an area of interest, the area of interest that I identified on the daily time frame. So I typed that up too. 10% area of interest, and let me put W to remind us that this happened on the weekly time frame. Next, round psychological level. What is round psychological level? Round psychological level is basically this number you see in black, 1.12500. What is a round psychological level? A round psychological level is basically any number that ends in a 0 or multiple 0. For example, this number right here ends with 2 zeros, so that's a round psychological level. And it's also this black line you see right here. The question is weekly time frame rejecting off of the round psychological level 500? The answer is yes. We wicked into it before taking off, so yeah, I'm gonna type that up. Weekly time frame is rejecting off of round psychological level 500. That's how I say the number. I don't say 1.2 whatever that is. So 2% W round psychological level. But I'ma forever spell this word wrong. P S Y C H. Okay, cool. Round psychology. And if you're wondering why this is worth so low compared to the other stuff, that's because the round psychological level, it's an added confluence. It doesn't break or make your trade. And it's the same thing as the EMA. The EMA is also an added confluence, just an extra confluence. It doesn't break or make your trade. I can remove the round psychological level, delete this line, and also delete the EMA, and I'll still trade fine. Sometimes I even delete the EMA by accident and then go like for weeks and without realizing it. That's why they're worth so low. They're just added confluences. Next thing is weekly rejection candle. If y'all don't know what a rejection candle is, it will basically be like a doji right here at this area of interest, or a pin bar, or some blue candle like this, confirming that we're rejecting this area of interest. We did not do that. All the weekly did was just wick into it and then pushed up. So no, we don't have a rejection candle on the weekly time frame. Now we go down to the daily time frame. So I bring out the thing for the daily. Hold on, let me go back to the weekly. Daily. Where's daily? Okay, daily right there. Bro, I'm still on the weekly time frame. Daily. Now where's the thing? Okay, reasons. Daily time frame. Structure point. Is daily time frame rejecting off of the previous structure point? The answer is no. Daily time frame is not rejecting off of the previous structure point. This down here is the previous structure point. This is not the previous structure point, and this is not the previous structure point. This is the previous structure point. Daily time frame is not rejecting off of it since it's above it. If it was like down here like this, then it would be rejecting off of the previous structure point. So no for previous structure point. And then EMA, is daily time frame rejecting off of the EMA? No, it's not rejecting off of the EMA. If we wicked into it like this, then we will be rejecting off of the EMA, but price is above it and the EMA is below it, so we did not reject off of the EMA. So we cross out structure point, we cross out EMA. Is daily time frame rejecting off of an area of interest? The answer is yes. Daily time frame is rejecting off of this daily area of interest. So I type it up. 10% for area of interest on the daily time frame, and then I just put D for daily area of interest. Next, run psychological level. Yes, daily time frame is rejecting off of the run psychological level 500, same as the weekly. 2%. 2% daily time frame. PS round psych level. Did I spell that right? Yeah, I think I did. 2%. Last thing, daily rejection candle. And like I already told you, a rejection candle is doji, maybe a blue candle or a pin bar. Or right here, we did not create any of that, so no daily time frame, no rejection candle. 4 hour is a little different compared to the other time frames. We don't start looking at this until 4 hour is bullish again, until 4 hour is back to aligning with the direction. So for now, we just ignore this and then unpause. Blue candle on the daily, we go up to the weekly time frame. Weekly, still the same. All we did was just create that wick into the zone. Daily time frame, we have now created our rejection candle, a beautiful pin bar. So I tap that up. D for daily, 10%, and then D rejection candle. Then we go down to the 4 hour to see what changed. 4 hour is now bullish. This is not the cleanest lower high, but we are now bullish on the 4 hour. So I tap that up. 4 hour is no longer bearish, it's now bullish. And this now goes back to 30%. Now we can start looking for this structure point. Is the 4 hour rejecting off of the previous structure point? The answer is no. This is the previous structure point and price is above it. Next, EMA. Is the 4 hour rejecting off of the EMA? Even though it looks like it, no, 4 hour is not rejecting off of the EMA. I want the 4 hour pullback to be the one rejecting off of the EMA, not this move we created to the upside. Has the 4 hour created the higher low? No, 4 hour has not created the higher low. If you don't know what the higher low is, it's the beginning of this move to the upside. So this is the higher low. And when we are bearish, the lower high is this point right here, the beginning of this move to the downside. We create lower highs when we are bearish and we create higher lows when we are bullish. Very simple, very easy to understand. Okay, next, rejection candle. No, 4 hour has not created the rejection candle. We start looking for it once the 4 hour has created its pullback. Now we unpause and we can do it on the 4 hour, since what we're looking for can only be found on the 4 hour. Okay, nice. Okay, now we look at this again. Previous structure point. Is the 4 hour rejecting off of the previous structure point? This time, yes. As you can see, previous structure point right here and price stopped right there. So I type that up. 10%. Previous structure point, 4 hour. Next is the 4 hour rejecting off of the EMA. This time, yup, as you can see, we created a wick rejecting off of the EMA. Type that up. 5%. Has the 4 hour created the higher low? Yes, 4 hour has created the higher low, specifically potential higher low. This is not a confirmed higher low until price first closes above the higher high. So we type that up. Yes, 4 hour has created the potential higher low. Higher low, 4 hour. And then the last thing, rejection candle. Has 4 hour created the rejection candle? Yes, 4 hour has created the rejection candle. This blue candle right here shows that price from here might start going up. So 10%. By lower time frames, I mean from the 2 hour to the 15 minute. What are we going to be looking for on the lower time frames? A shift of structure and an engulfing. First, let's start with the shift of structure. In this move, the 4 hour made, there is market structure. Where do we see that? On the lower time frames. This move, the 4 hour made to the upside, just looks like a line, but if we go down to the lower time frames, we understand that the lower time frames shifted bullish and are creating higher highs and the higher lows to create the move. And then when they shift bearish, they create this 4 hour pullback. And then when they shift bullish again, that's the shift of structure. This is what we're going to be looking for. I know this is a little confusing for some of you, but keep rewatching the video and I bet you will understand. So let's go look for the shift of structure in here. Let's go down to the 30 minutes since it usually looks the cleanest, and I am right about that. So clean. Okay, 30 minute was bearish and then we shifted bullish, closing above the lower high. Why did 30 minutes shift bullish? 30 minutes shifted bullish to create the 4 hour move to the upside. 30 minutes shifted bullish to create this move made with blue candles on the 4 hour. And we go back to the lower time frames, the 30 minute. From here, 30 minutes continue creating higher highs and higher lows, higher high, higher low, higher high, and then we shifted bearish, closing under the previous structure point. Why did 30 minutes shift bearish? 30 minutes shifted bearish to create the 4 hour pullback, and then when we shifted bullish again, closing above the lower high, that is the shift of structure. And just to show you that we are actually looking at the pullback right here, we can go up to the 4 hour and see the line that I drew. As you can see, it's right inside that 4 hour pullback, and since we got that shift of structure, we type that up. 10% SOS, shift of structure. Next is engulfing candle. When we are looking for buys, we look for a bullish engulfing candle, and when we are looking for sells, we look for a bearish engulfing candle. In our case, we're going to be looking for a bullish engulfing candle since we are looking for longs. If you don't know what a bullish engulfing candle is, it's when we have a red candle like this and the next candle that follows is a blue candle closing above the red candle. And a bearish engulfing candle is when we have a blue candle and the next candle that follows is a red candle closing under the blue candle. So let's look for a bullish engulfing candle. Where do we look for that? We look for it on the 4 hour, 2 hour, 1 hour, 30 minute, or sometimes 15 minute. I don't look for it on the 30 minute and the 15 minute because I think that's just too low. So I always start from the 1 hour. So 1 hour, do you see this pattern? The answer should be no, I don't see it. It took 2 blue candles to close above the red one. We only need 1 candle to be the one closing above the red. So no, we go up to the 2 hour. 2 hour, do you see the blue engulfing candle or the bullish engulfing candle? Yes, you should be able to see it. Beautiful bullish engulfing candle right here. So we type it up. That's what we were looking for. 10% bullish engulfing. What the? bullish engulfing. Oh man. And now we add it up. Let's skip all the 2s and the 5s just to make it easier. 30, 40, 50, 60, 70, 80, 90, 100, 110, 120, 125, 127, 129. So let me write that down. 129. You can think of this as the chance of your grade working out. And by the way, this grading system is based off of the American school grading system. So a A setup will be anything between a 90 and a 100. A B setup will be anything between a 80 and a 89. A C 70, 79. A D a 60, 69. F a 0 to 59. Last question, which setup should I take? The A, the B, the C, the D, or the F? This is very obvious, but I know some of you are gonna ask it, so I'm gonna answer it now. You should always go with the A setup. Why do you want to put your money on something that you know isn't at its best? And what's more at its best than a A setup? I know some of you itching to watch this play out, and by the way, I have no idea how this is gonna play out. The farthest I saw this go when I picked this to use for this lesson was when the daily time frame created a red candle like this, wicking into this area of interest. That's why I didn't have multiple areas of interest on the daily time frame identified, because I knew price was just gonna pull up to this one. But from here, I have no idea if this is gonna do this or maybe this. Why didn't I watch the whole thing play out? I wanted to keep myself invested, because if I knew how the whole thing played out, I would have definitely been bored making this video. So when do we enter? We enter after we get our last step, which is the entry, the engulfing candle. So we go back down to the 2 hour and we got our engulfing candle right here. This is where we enter. And stop loss is always placed under the higher low. This is the higher high on the 30-minute, and this down here is the higher low. Stop loss, we place it under the higher low, and starting from the wicks, we add 10 to 15 pips. If you want to feel safe, you can always add more pips. So 18 pips right now, the stop loss, we add 10, that's 28. And then take profit, we go up to the daily time frame. Oh man, that just spoiled it. This is why I hate the replay. Price is obviously not up here, price is like down here. Whatever, let's still identify take profit. Take profit most of the time is at the daily structure point or the weekly structure point, but right now I am seeing this right here. Whenever price is under this, we tend to go down. We got to this line, price went down, wicked into it, went down, got to this line, put back, used as resistance right here, and back here too, used as resistance. So this is a valid place to place our take profit. So let me put this up, let me drag it to the top where the line is at, and let's go down to the 1 hour to watch it play out. I'm pretty confident that this will go up for obvious reasons. Okay, so let's unpause. Oh yeah, let me put this on 10x. Nobody wanna see one candle per hour. And there, damn, that's crazy. Yo, and price did go up. Did we get to the daily structure point though? Yeah, we did. So if you place your take profit at the daily structure point too, you would have made your money. Okay, that's it for this lesson. Drop a like, drop a comment, drop a question. and I will see you next week.